It's a sigh of relief, right? That's what most people are feeling today, because the Reserve Bank has announced that they will not be increasing the interest rate. So the interest rate will be kept unchanged at 11.75%. So many people have been struggling to deal with this situation. I've made a video maybe a month, 2 months ago, explaining how to deal with the hikes of interest rate. So I'll put the link on the description below so that you can check that video up and see if you can learn one or two things to deal with the hikes of interest rate. My point of discussion today is not on interest rate, but it's in real estate investing, right? So before we get to that, as you know, in this channel, we talk all things real estate, all things personal finance, so that you are the driver of financial life and not just the passenger. All right? So real estate investing. What is real estate investing? Because you always hear so many people talking about real estate investing. Right? So what I want to expose to you is that there's so many strategies that are used by different people to invest in real estate, and all those things works if they are applied right? Because real estate is very, very much diverse, and it means different people to different people, because different people have different strategies. So there are many ways in which you can invest in property, right? And then property is one of the vehicle that you can invest in without a lot of money. This is what real estate offers that no any other sort of investment will offer. Because, for example, if you want to invest in a business, you have to have some startup capital and all that. If you want to invest in stocks, you have to buy them, if all those kind of stuff. But in real estate, you can use what we call other people's money to make money. In other words, money without money. This is the only vehicle, which is real estate, that enables you to be able to do that, right? So what are the strategies that you can use in real estate investing? There are a lot of them. So the only thing is that you need to choose your own strategy and then master the strategy, and then you can start making some money. Yeah? So I'm just going to give you a few strategies so that you can actually look at what strategy is best for you. So I'm not going to really dive into too much of each, but I'm just going to give you a little snippet of what each strategy mean, right? On a surface level, right? But I'm going to make deeper videos that is going to explain each strategy and what it means and how to go about it, right? So the first strategy you can use in real estate is what is called sourcing, right? Sourcing, it means it's mainly for people that are really starting in real estate investment. It's not for people that have been doing it for a long time. Mainly is done to generate some capital to use on other strategies, right? So sourcing is when you find and negotiate a deal for an investor, right? So you have an investor that you know they have the money, so you just go and you find the right property and you negotiate a right deal for that investor, and they thank you with something, right? So that is sourcing. All right. And then the second strategy is flipping, right? So when flipping, it's actually a flip or flop. That's actually the full name for it. But what it basically means is that you buy a property at a low market value. In most cases, it's a dilapidated property, a property that is in a very bad condition. You renovate it and you sell it for a profit. So this is called selling. This is investing for capital gains, right? So you find a property in a very bad condition, you renovate it and you sell it. right? I'm going to actually come back to this strategy to just offer you much more about it, and but we'll get to that. And then there's also what you call buy to let strategy, right? So when you buy to let, it means you buy and hold the property, you place a tenant, and you ensure that you have a positive cash flow, right? So many people get it wrong here, because the key here is to ensure that you have a positive cash flow, right? So many people get it wrong. They understand that you need to invest in property, you need to rent out your property, but after they're renting out property, they have so much monthly operating expenses that they need to take from their pocket. If you are doing this strategy right, you don't have to take out anything out of your pocket. You need to have a positive cash flow, which means that there must be some money left or remaining after you have paid all your operating expenses, like your bond, your levies, your rates and taxes, and all that, right? And then the next strategy is multi-let, right? Multi-let is more similar to buy to let, right? What it means is that you buy a block of units, right? And then you rent them out. So it's the same strategy as buy-to-let. It's just that on a buy-to-let, you are looking at one property, but multi-let, you are looking at multiple units, right? And then there's also, you can focus on student accommodation, right? A student accommodation is normally when you are located closer to a university or something like that. You know that in South Africa, NAFSAs actually have some connection that they do with private people that have accommodation that they let. But what you need to know there is that normally in the January month, November and December, those homes will be vacant, so you need to have a strategy to deal with that, because the students will not be there at that point in time, right? And then you also have commercial, right? In terms of commercial strategy, is mainly people that are developers, right? They develop a property and they rent it out to accommodate a business, right? So that's also a strategy that you can use, right? Normally, okay, let's just get to the next one. The next one is new developments, right? Developments for people that are more hands-on, right? Like flipping, more hands-on. You build an estate, a new residential accommodation, then you sell it to people. In most cases, these guys are very, very economical, right? And then you have back-to-backs, right? Back-to-back is you are in the middle between a seller and a buyer, right? And then you renovate and you sell to the buyer. Or sometimes you don't even have to renovate, you just sell to the buyer immediately, right? And then the last one, but not the least, is lease options, right? So the lease option is when you take control of a property rather than to buy the property itself, but you take control of the property and you manage everything, and then you get something out of doing that, right? So these are the strategies you can use to invest as a property investor, as a real estate investor. You just need to see which one will work for you, right? So I'll start from the beginning. We started with sourcing, flipping, buy-to-let, multi-let, student accommodation, commercial developments, back-to-back, lease options. So these are the strategies that you can use, right, to ensure that you get to financial freedom, right? So there are some that are really my favorite and some that are really least of my favorite, because of the kind of person I am and my philosophy as a person and what I prefer. For example, I will talk about flipping, for example, right? So flipping for me is a strategy that I don't believe in it, but there's some people that believes in it, right? Like I said, flipping is buying and selling a property for a profit in a short space of time, but you buy a property that is in a bad condition, you renovate it, and then you sell it. But for me, there's 3 risks involved in this. This is why I will not involve myself into what we call flipping, right? So for example, there's an estimation risk, right? So estimation risk is when you have overestimated how much that property is actually worth, right? So that when you try to sell it, you are unable to sell it at the amount that you overestimated that it will sell for, because maybe you think that by doing the renovations is gonna appreciate the property, of which it doesn't. Because if you make a renovation on the wrong things, some of those things might not even affect the value of the house. So there is this risk. But I must say, in all of those strategies, there's a risk. It's just a matter of what kind of a risk are you willing to take, right? There's also what we call a timing risk, right? A timing risk is mistiming the market, right? And then the real estate market does not sell fast, right? Because the market could just turn before you can sell that property. So you need to be able to understand what is happening in the market so that you do not expose yourself to this risk. There's also what you call a volatility risk, right? So the property value can change dramatically in a short space of time. So these are the things that you need to consider when you are buying to sell in a short space of time. So which one is my favorite really? My favorite really is to buy to let, right? It's slow, for sure, it's slow, but over time it goes up, right? But you just need to make sure that when you start with a positive cash flow and you minimize your monthly operating expenses. If you do that, then you're gonna be set, right? It's slow, but over time it pays off, right? Another thing that for me really works is back to backs, right? Back to back is when a property has a lot of equity, right? When it has a lot of equity, but it doesn't make sense to rent it out, because there are some over the next maybe few weeks, few months, I'm gonna break down each of these strategies, right? But now I'm just giving you a summary of what each strategy entails, right? So if, for example, there's some key indicators when you are looking at a buy to let, right? I will break that down in the next other videos, right? There are some key indicators that will tell you whether it's worth it to rent out a property or to sell that property. So for example, sometimes it doesn't make sense to keep and holding that property. You need to sell it. So when you do a back-to-back, it's when you actually buy a property and sell it immediately without doing anything on it. The key there is to ensure that you buy it at a bargain price and then you sell it at the market value, right? So such things you will understand as we go in this journey of property investing. So this is just the strategies or the basic strategies of property investing. So this is a starter, right? This is a starter. So if you want to know more about this, please, if you have not already subscribed to this channel, please subscribe. Please like the video, share with your friends. As you know, always the big elephant in the Kuria Manenge. I'm here for you. Cheers. I'm out. Mic drop.